Right. Good evening, team. Good evening, the online team.
Good evening. Sir.
Okay, nice meeting you once again. Welcome back from the long weekend.
Thank you.
So we are going to be, we left off last time, having introduced books of original entry. We introduced books of original entry. And we talked about quite a number of books. Just a small recap. Yes, number one, what you can remember, the sales day book. This records credit what? Credit sales. Number two, purchases the book. This one specifically records credit purchases. And then number three, sales returns the book. What we call returns inwards the book. Okay, that one records returns that have come, returns on sales when we sell and then some goods are returned back to us. Yes. The purchases returns the book. Or returns outwards. Yeah. We looked at the cash book, which we say that it is both a book of original entry and a ledger at the same time. Then our journal. Okay, so we described at least each of these in detail. Yeah. If you are not there, you can request for that audio and video so that you acquaint yourself with the discussion. But we spent a lot of more time looking at a cash book. We looked at a cash book. I hope you guys tried out the journal using the other example. Yeah. Because it was all about double entry. If we know the double entry, then feeding in the journal becomes very easy. So a cash book is what we looked at last time. And it's what we are going to look at the most today before we look at anything else. So we say that a cash book, this one specifically records, cash receipts and what? And cash payments. And we said it can either be single column or two column or double column, and then the three column. And we say in all these, the only thing that changes in the structure of that journal is under the amounts column. If it is a single column, the amount column will be 1, meaning someone is dealing maybe in cash alone. And then if it is 2 column, then we divide the amounts column. One of them will be bank, and then the other one is what? Is cash. Then 3 column, we introduced in an aspect to do with discounts. Are we together? We introduced in what we call discounts. And discounts both on sales and what? And purchases. And we say that these discounts can either be trade or cash discounts. Trade discounts, they have no accounting what? Accounting entries or treatment. Yeah, it's just out of a bargain. Are we together? And then cash discounts, these ones, they definitely have an accounting treatment. And we shall be seeing this accounting treatment immediately after the cash book. They have an accounting treatment. That accounting treatment, we shall look at it after the cash book, and we understand what happens if there is a cash discount. How do we pass such an entry in our books of accounts following the double entry system? So that is it. And today we are supposed to do number 5 of the paper that I have shared in the group. So please open. It is September 2022. That question was done in September 2022. For those people that have question banks. And it is question 5. That's what we are going to be looking at. And we see what they actually needed, what they actually wanted from that question. Are we together, guys? So guys, we said that a cash book is both a ledger and a book of original entry. Are we together? Now, being that it is a ledger, what we call a ledger, if I'm to give you a fast forward, because that's what we are going to look at after, but what we call a ledger is like a unit of double entry. We use that ledger to record every increase or decrease in each item or in each element of financial statements. We say that we have 5 elements of financial statements. We have an asset, we have liability, we have equity and all its components. We have incomes and what? And expenses. Are we together? Now, to record the changes in those elements, those changes are recorded in what we call a ledger. Are we together? Or a T account. Now, that ledger, we shall put in all transactions that relate to that particular element. If it is an asset, which asset? Cash. Cash is an asset. So anything that we receive in cash, we shall put it in that ledger. And anything that we pay using cash, we put it in that ledger. If it is an asset, say receivables or debtors, if we sell to them on credit, we record that entry in that ledger. Are we together? And if they pay us or anything that derecognizes them is recorded in that what? In that ledger. So anything that brings about an increase in that particular element and anything that brings about a decrease in that particular element, they are recorded in what we call a ledger. Now, since a cash book that we are looking at is both a ledger and a book of original entry, its structure is ledger-like. Are we together? Its structure is ledger-like. It is a T. It is in a T format. Are we together? It is in a T format, just like we saw last time. So this is how it is if we are to draw our cash book. And all T accounts, or all ledgers, they will have 2 sides, the left-hand side, the right-hand side. Which left-hand side represents what we call a debit. We saw that in our last class. And a credit. That is it. For a cash book in particular, the debit side is a receiving side. Are we together? Whenever we receive cash, are we together? Because cash is an asset, all assets have a debit normal balance. Are we together? And that normal balance is the balance when that particular element is increasing. We looked at that under double entry when we are introducing double entry. Are we together? So anything that increases that particular element, if it is an asset, it will be debited. And if it is cash or bank, what increases it is when we receive more. Are we together? And what reduces it is when we make payments out of either that cash or that bank account. Are we together? So therefore, we say that this left-hand side is a receiving side. And then the right-hand side is a payment what? But this does not apply to all ledgers. Yeah? It doesn't apply to all ledgers. This is specifically for cash and what? For cash and bank. We had that discussion last time and we said that debit does not mean receiving and credit does not mean losing or paying. Are we together? But for a cash book in particular, that is okay. If you are to follow the same rules of double what? If you are to follow the same rules of double entry. So meaning whatever we receive in cash or in bank, we have to record it on the debit side. And whatever we pay out, whatever we lose in terms of cash and in terms of bank, we record it on the right-hand side, which is the credit what? Which is the credit side. Okay, so I think we can start doing our number. Now, before you do any number, you have to first of all assess whether that number is going to lead into a 2-column cash book or a 3-column what? A 3-column cash book. So meaning, by all means, you have to run through the transactions, not overly reading them, but looking through the transactions and you sense or spot whether there is any element to do with a cash discount or a cash what? Yes, a cash discount. Are we together? Because trade discounts are not recorded anyway. Cash discount. So if there is a cash discount, then you know that your cash book is going to have, it must have a component or a column of discounts, and hence it is going to be a 3-column what? A 3-column cash book. So if you are to read through those transactions, the number, question number 5, part B, Akelo runs a wholesale business in Lira City, buying and selling agricultural produce. Yes? Yes. Sorry?
What differentiates between 2-column cash book? Also, the data may find a statement like this.
Okay, so the question here is what differentiates between a 2-column cash book or 3-column cash book and a ledger? Yeah, that is his question. Now, when we get to ledgers, okay, I never wanted to go there now, but we're going to look at it today. But please, in ledgers, we have what we call a general ledger, yeah, where all elements, all transactions relating to elements are recorded. Are we together? Now, part of the general ledger, also a cash book, is part of the general ledger. Now, whether you draw a 2-column cash book or you separate a ledger for cash and bank, it is all okay. It is all the same. Are we together? But when we get to ledger, please let's hold this transaction for a few more minutes ahead. Is it okay? Yeah. I will answer the question very well after doing whatever we are doing now. When we get to ledgers. If we don't get to ledgers today, then I believe by the time we finish, by the time we reach in our next class, your answer will be there. I don't want to bring in terms that we are not yet used to now. Joyce, please mute. Joyce N, kindly mute. So guys, we are saying that Akelo runs a wholesale business in Lira City, buying and selling agricultural produce. The following transactions were extracted from her records for the month of February 2022. Now the requirement is we are required to prepare a cash book, for Akelo's business for the month of February 2022. Now these are always low-hanging fruits that everyone should be able to get. If a question comes and they want you to draw a cash book, really, this question, everyone has to get 20 out of what? Out of 10, or whatever marks are there. There are 15 here. You should be able to get 15 out of 15. There is no logic at all. A cash book, anything that is non-cash, it has no place in a what? In a cash book. However much they give you that transaction, it is not a must that whatever the examiner gives is important for purposes of execution of that NAM. Are we together? So they can put in very many transactions, but for as long as that particular transaction did not end in either cash coming in or moving out, then that transaction has no place in the cash book. Are we together? And the logic is very simple. When you're reading a transaction, assess whether that cash came in or it did what? Or it went out. If it came in, put it on the left-hand side. If it moved out, record it on the right-hand side. With respect to whether it was cash or what? With respect to whether it was cash or bank. The other bit of a technicality comes in when we are dealing with discounts, but still it is the same thing. If you're given a discount, reduce that discount from that amount and move forward. Are we together? So these are numbers that at least everyone should pass. Okay. So which kind of a cash book are we going to draw? 2 column, 3 column? Do we have anything to do with discounts? I'm seeing something here. Yeah? So perhaps we may need to draw a 3 column. We may need to draw a 3 column cash book because we are having discounts available in this particular question. Are we together? Okay, so let's get started. This is Akelo's three column cash book for the month of February. Okay, may need to extend mine to more than 1 page. But find a way, please. If it is a 3 column cash book, there is no crime in you using that booklet in a landscape format. Okay, so you can twist the booklet and then you write in a landscape what? In the landscape format. We know landscape, right? Rectangular. Are we together? Eh? Horizontally, yeah. Because when you write it in the portrait way, the way it is, it won't fit. You have very many columns that you have to fill in. Okay, so we shall have our date. And then we shall have our particulars or the title of the account. Or details. Then we shall have the amount. But this amounts column is going to be divided into cash, bank, and then discount. Which discount do we have on the debit side? It is the discount allowed. The discount allowed. It must come on the left-hand side, because on the left-hand side, that's where we receive. Are we together? And that discount that we allow, it affects whatever we receive. Are we together? Okay. So this is our, we say the ledger has 2 sides. The left-hand side So that is our left-hand side. Now the same things are going to appear on the right-hand what? On the right-hand side of that ledger. So on the right-hand side, we shall have a date still. We shall have the same particulars or details. We shall have cash. We shall have bank. And then we shall have discount received. Discount received. Two sides, okay? If you need to see it in a much more comprehensive, in its comprehensive way, that is how it is. Okay? Date particulars, cash bank, discount allowed. Date particulars, cash bank, discount received. Okay? Then we are saying that we have a debit side and then we have a credit what? Credit side. Now you need to show whether you have precise or you're going to precise the figures that are going to appear in this cash book. Now it depends on the figures that were given. If they are so huge that they may affect your presentation, then you may actually need to precise them and work in a nearest maybe thousands or millions, depending. Are we together? So in my particular case, in my case, I'm going to work in thousands. So I'm going to say that all figures, all amounts in shillings, thousands. I need to make that clear. Whatever they are going to sit down here is going to be knocked off. 3 zeros are going to be knocked off from them, from those figures that we shall be having. All right. Is it okay? Should we carry on? Huh? All right. So the first transaction per transaction. Transaction per transaction. So the first one is I think that is okay in terms of visibility. Okay, transaction per transaction. 1st of February, that is 2022, balances brought forward. Now, this concept here of balances brought forward, it is a concept in ledgers that whenever you have a ledger or a T account recording every increase or decrease in that particular element, at the end of the period, you need to balance off that what? You need to balance off that ledger. And as we're balancing any ledger, like we are going to see, you will have balances. Not in all circumstances, but where you have balances, those balances shall be the difference if there is an imbalance at the end of the period between the left-hand side and the right-hand what? And the right-hand side. Now the difference is a balance. And that balance is given to a side that has a lower figure to make that ledger what? To make that ledger balance. Are we together? Now, those balances, they follow what we call double entry. They follow the normal balances of each element, with a few exceptions that we shall see in ledgers. But if they tell you that we have balances brought forward of cash 2.1 and bank 2.6, then it means that this cash book started with some money. We had some money in those accounts, both in cash and in what? And in bank. Are we together? But those balances, they follow the double entry, the normal balances of any element. So if it is cash and it is bank, you need to assess whether these two accounts are assets, liabilities, or what? Or incomes, expenses, or equity. Are we together? But I won't talk about incomes for now. Assets, liabilities, or equity. Are we together? So, and you say if it is an asset, what is the normal balance of an asset? The normal balance of an asset is a debit balance. So if they tell you that we have opening or balances brought forward, then those balances brought forward, other factors held constant, they will be normal balances of that account. Are we together? And there will be a balance brought forward from the previous what? From the previous period. We shall see more about it in ledgers, but that is a fast forward since we are doing this number now. So we are beginning with balances. So it is wrong for you to start with transactions for the period before bringing balances that stayed in the previous period. Are we together? So we need to begin with those balances, then we add whatever is in this period. Okay, so we have opening balances.
I go take a meeting.
Please, Saidat mute. Nasanga, Saidat mute. So on 1st of Feb, on 1st of Feb, we are having a balance brought what? We shall be calling it balances brought forward. If it is opening balances, we shall see more about it. So meaning we started the month of March with some balances that we ended with in the month of Feb, with some balances in the month of January. Are we together? So they are forming balances now. Yes, please.
Good evening.
Good evening, Maureen.
So my question is balance brought forward the same as opening balance?
Yeah. Balance brought forward, balance brought down, opening balance, they are the same what? They are the same thing.
Thank you.
Opening balance. But we are going to appreciate that concept of opening balance.
Thank you.
All right. Cash. How much cash did we start with? With 2.1 million. So we started with cash of 2.1. So me, I'm writing only 2,100. I hope we understand why. Yeah. Some I've hidden some 3 zeros up there. And then how much did we start with in bank? 23.6. $23.6. No discount, okay? Okay. That is it. That is all you needed to do. That is our opening balance. Reason why I'm putting it on the left-hand side is because assets have a debit normal balance. Are we together? Assets have a debit normal balance. So any balance brought down shall be on the debit what? On the debit side. And it is the balance that has to start off that ledger. Are we together? Meaning it is wrong for you to get opening balance and you put it just in the middle of the ledger or down the ledger. That is wrong. If it is opening balance, it is the one that has to start the ledger before any other transaction. Are we together? And both cash and bank, they will always have their opening balances on the debit side, with the exception of only bank. Are we together? With the exception of only what? Of bank. Because a bank can either be an asset or a liability, depending on the circumstances. It will be an asset if you have money there, and it will be a liability if you overdraw that account. Are we together? So if you have a bank overdraft, that bank overdraft is a liability. It is not an asset. And if it is given to you, if it was given to us here in this number, and they told us that we have balances brought forward, cash 2.1 million, and bank overdraft of 23.6, then in such a case, we wouldn't put this 23.6 here. Because putting it on the debit side, it means that it is an asset. Are we together? In such a case, We would rather come and say that on the same 1st of Feb, yeah, we had a balance brought what? Brought down of 23,600. Now, this means that bank specifically is on the credit side because it is not an asset. We closed off with a liability. Are we together? Please note that. Note it. Note it. So that is it. That is where we are. Shall we move ahead? Okay. They are saying that on the same 1st of Feb, Akelo paid the following farmers for stock deliveries. She paid Okelo 2.1 million by check and paid Otim 0.5 million in what? In cash. Now, the keyword here is what? Paid. Are we together? So if we are paying, then there is no way it can happen. It can appear on the left-hand what? On the left-hand side. We shall put it on the right-hand side. That's where payments are. Okay, so we are having Okelo. That is on 1st of Feb. We are paying Okelo. And we are also paying Otim. We are paying Otim. We are paying Okelo using our money in the bank, and that is 2.1 million. And then we are paying Otim 0.5 in cash. So I'm putting 500. Are we together, guys? On the left-hand side, that's where we pay. But as you're recording, make sure that what was paid in cash, put it in a cash column. What was paid in the bank, put it in a bank what? Put it in a bank column. Okay. We move ahead. So this Otim is also the same 1st of Feb. Then 2nd of Feb, received 300,000 cash in refunds resulting from overpayment. Full stop. So we are receiving 300 refunds. Are we together? Meaning we have overpaid someone whose name has not been said. Are we together? So since the name has not been said, we shall just put refund. Okay? So it is a refund of 300,000. Now, we are receiving. We are receiving. We are receiving. Guys, please mute. Marion. Marion, mute. So we are having a refund on 2nd of Feb. And that refund came in cash, right? Of 300. Came in cash of 300. So we put it in the cash column. On the same date, Akelo paid for 50 bags of maize grains by check as full what? As full settlement. Now we may not need to record this so fast because there is some additional information to it. On the same date, which is 2nd of Feb, she paid for 50 bags of maize grains by check as full what? As full settlement. These bags were supplied by Akelo. Okay. These bags were supplied, let's say were sold. Not so? But why? They are saying were supplied by Akelo. The key word here is that Akelo paid. Are we together? And they are saying that the bags were supplied to. Okay. That makes sense, right? These bags were supplied to Akelo by someone, isn't it so? On 30th of January 2022. On the following terms. The price per bag was 40. 1,000 per bag. And the discount of shillings 1,500 per bag would be allowed by the farmer if full payment was made within 1 week. So we need to make an assessment. Did Akelo meet the terms of a discount? Did she meet those terms? Because the terms were that she's supposed to pay within a week. When was the date of the transaction? 30th of January. Are we together? That's when she bought the bags. When did she pay? She's paying on 2nd, so meaning she's within the timeline. So she can receive the what? She can receive the discount. All right, guys, she can receive the discount. Question is, how much is the discount? Now, at the time of the transaction, the initial transaction, what happened? Akelo bought. She bought how many bags? She bought 50 bags. Yes. Each at 40,000. So meaning our purchase price is 2 million. That was the purchase price. And this is what Akelo was supposed to pay. Are we together? This is what Akelo was supposed to pay. But they are saying that this Akelo is going to receive a discount. So how much is the discount? It is 1,500 times how many bags? Times 50 bags. So what do we get there? What do we get? We are getting 70,000. So Akelo is going to get a discount of 75,000. Question is, how much money is Akelo going to part with? Or how much did she part with in her bank? Because that transaction was in the bank, not so? She settled by what? By check. So how much money did she actually pay? The actual amount paid. So she was supposed to pay 2 million, but they're allowing her a discount of 75. So she's parting with Samuel. Samuel's tab A. Please kindly mute Samuel. Samuel, mute. Yes. How much? 1,925,000. This is the actual amount what? Paid. So when we are recording it in our bank, this is what we shall record in the bank. Isn't it so? Yeah. That's what we shall record in the bank. Okay. So let's go and record it. And the discount is 75,000. Which kind of discount is that? Allowed received. That is a discount received. And that all happened on the 2nd of February. We are making purchases. So these purchases were made through the bank. Kindly remind me what the figure was.
1925.
I'm putting it in the bank column. Now I have a discount in that transaction, so I have to bring that discount. Isn't it so? And that is 70 what? 75. Are we together, guys? It's a discount received. It reduced on what we actually paid. Is it hard? Yes, please.
Excuse me, sir.
Yes, taking over.
Are those sales or purchases? I thought they sold it for Kero.
Okay, they were supplied to Akelo, meaning Akelo was purchasing, not so? Yeah, so they are purchases. And that is the reason as to why she's paying.
Okay. Akero is the owner of that business.
Yeah,
Thank you.
Akelo is the owner of the business. She's asking, why are we putting a discount on the credit side? Yes? Okay, she's bringing it in a double entry perspective that discounts are incomes and hence supposed to be credited. But that is very correct, and we are going to look at that immediately after this. But I don't want to give that as an explanation as to why it is coming here. Exactly. The discount received is affecting how much you're supposed to pay. Are we together? So payments are on the credit side. Are we together? And that discount that you're going to receive is going to affect those payments. Are we together? Now, the reason as to why I temporarily denied your answer is because crediting discount received cannot be credited in cash book. Are we together? We cannot bring that in a cash book because this ledger is for cash, for the cash book. Are we together? So we cannot say that we are crediting the cash book simply because of, you get, not for now, but in the general ledger we shall see that. That's no problem. Yes, please.
When it comes to discount allowed, for example, it affects the payment. For example, I am the owner of the business as Akelo. When I go to purchase goods and they give me on credit, that is discount allowed, discount received. Then, should I repeat myself?
Yeah, please do.
For example, I am Akelo, the owner of the business. I go to your company to purchase some goods. Then you give me a discount. Like, for example, within a week, is that a discount received?
Yeah, you're receiving a discount.
Then when it comes to discount allowed, is it that discount the owner of the business, I am giving?
Yes, exactly. You're giving it to your customers. So you are allowing them a discount. Yeah.
Thank you.
Yeah, that is discount. And that's why that discount allowed is on the debits on the receiving side. Because if you allow a customer a discount, it is going to affect what you receive. Okay? It is going to affect what you receive. Are we together, guys? Yeah. Okay. Shall we continue? Then number 3, on 5th of February, paid for transport shillings 2.2 million through the bank and wages for loading and offloading of bags shillings 650 in cash. These expenses had accrued as at 31st of January 2022. Now, telling us that they had accrued whatever or whenever they accrued, it is not going to concern us in a cash book. Our question here, did we receive this month? Did we pay this month? That is enough. Are we together? So even if they accrued 10 years ago, no problem. We received now. Okay? So we are paying, right? So we are paying for transport and then wages. And that is 50. So 052 transport and then wages. Transport and then wages. Transport is 2.2. Oh, the mode bank, and then the other one is cash. Okay. Yeah, that is it. 650. Then transaction number 4 on the same 5th, withdrew shillings 10 million from the business's bank account and kept it in the business's money safe. Sold 20 bags, that is another transaction. But the first one is that we are withdrawing 10 million and we are putting it in the business's money safe. So it is now cash, not so? Okay. So withdraw is like you are removing it, not so? That is the right-hand side. Are we together? And then we are receiving through cash. We are paying or we are removing money from the bank. Okay, 0502. How much money is leaving the bank account? 10 million. So we are putting it under bank as 10,000. Are we together? And this money is going in a cash form to our cash ledger or cash account. And then, sorry? So, sorry?
It's like that place of cash.
Mm.
What did you withdraw that?
Since we are withdrawing money and you put withdraw. Okay, yeah. Since it is a cash book, as a book of original entry, it is okay, but as a ledger, okay? Such a transaction, remember our double entry. You're withdrawing into cash. How many?
Ma'am, I have a question. Why are we not calling it as drawings?
Someone online is asking a question, why we are not calling them drawings? Business resources, personal use. Are we together? Business resources put to personal use. Now, had we drawn that money from the bank for our own or for Akelo's personal needs, that was going to be a drawing. But since we are putting it in the business drawer, means that it is still within the business. Okay?
Thank you. Thank you.
Business. Okay, why I'm calling it cash and not withdraw, we are going to see that under ledgers. Okay? We are going to see that. We are going to appreciate it more under ledgers. Kindly help us mute those that are not part of us. Yeah, they are part of us, but certainly part of somewhere else as well. Should we go ahead? So we are reducing that money from the bank and we are referencing. Now that is, we call that a corresponding nature of double entry. For every debit, there must be a corresponding. Are we together? Now, because of correspondence, when you are in the bank ledger and you're withdrawing money to put it in a cash form, show that that money has gone simply because of cash. In the favor of what? In the favor of cash. But let's hold that. We shall see that in the ledgers. No problem. Even if you put withdraw for a cash book, it is what? Is okay. But if they tell you ledgers, then you have to follow the double entry rules. Are we together? Yeah. So, and here we are going to put the same 10 under cash in the cash column. Are we together? And we are saying that that money came from the bank. Are we together? Now, these are called contra entries. Okay? They are called contra. They are called contra entries. Contra entry These are entries where double entry starts from the same ledger and ends up in the same what? In the same ledger. Are we together? Those are called contra entries. For example, we are still in the same cash book. Take the cash book to be a ledger, and it is from cash to bank, cash to bank. So it's starting in the same ledger and ending into the same what? And ending into the same ledger. All right. Are we together on this transaction? Okay. So we are still, okay. Yeah, we are still continuing. Sold 20 bags of maize grain at shillings 50,000 per bag to Gaffey Quality Millers on credit. On what? On credit. Additional terms for payment indicated that 2% discount would be allowed if payment was made within, where do we record this one? On the left-hand side or right-hand side?
I think we don't record
Anywhere
it
it is okay.
anywhere.
We don't record it anywhere. Eh?
Because this is not the first payment of receipt.
Okay. Yeah, I think it's okay. There is no cash involved in the transaction. So maybe when they actually pay, that's when we shall record. But for now, we are doing nothing. Are we together, guys?
Yes.
If or when we pay. So if anything does not result into receiving and paying, we don't record. Yes, please. Guys, mute tab A. Samuel's tab A. I don't know, maybe it is Samuel. Samuel, mute. Yes?
I still haven't gotten the reason why we did not put the 75,000 this time.
Which one?
The other one, because I didn't know this.
Why we haven't put it on?
Why did you put
On the debit side? Because it is discount received. Remember, you're not receiving that money. Are you? Okay, our next discussion is going to be discounts and returns. That is our next discussion after this cash book. But for now, receiving a discount does not mean that the supplier is going to get money and give you. Is it what it means? No. It is not what it means. And putting it in a cash book here, we are not putting it there simply because it is a cash transaction. It is not a cash transaction. We are putting it in a cash book to show effect. Are we together? It is simply there to show effect. But it is not actually cash coming in or cash moving out. Imagine, let's go back to the normal business transactions. I sell to you this phone, 1 million on credit. But I tell you, you pay me within 1 week, I'll deduct for you 50,000. Are we together? So you're going to give me 1 million. Is it what we are going to do? You give me 1 million, then you tell me, give me my 50K. No. If we have agreed, I'm giving you a 50,000 discount, then it means that what I'm actually going to receive is 900 and what? And 50, full stop. That's why what we receive as 950, we put it on the debit side. Are we together? The discount of 50 that I have given you as my customer, it comes on the same side to show effect that ideally that money was fully 1 million, but currently I have actually received 950 because of a discount. Are we together, guys? Did you understand? Now we are calling it a discount received, and we are putting it under on the credit side. I think that is what is causing problems. But it is on that credit side not because we are receiving money, but to show effect that what we actually paid was reduced by that figure. Yes.
Excuse me, sir.
Yes, please.
This transaction says Akelo sold 20 bags of what to Gaffey Quality Millers, but we are not recording the transaction. Is it that the transaction does not show that these people paid?
Yes, that is it. We
That's
are
why-
ignoring it because there is no cash paid or cash received.
Oh, okay. Thank you.
Yeah. All right, on 7th of February, paid 200,000 for a trading license through the bank. So that is 200,000 trading license. Please always take caution. When you're precising, there are some figures that can come and confuse you, like 200,000. It is a common error for someone to bring 200,000 there without precising it. So I normally tell people, if you are still having a problem with precising, don't precise. But the problem is that you'll be given a certain number that is in billions. Where are you going to get all that space to actually write those transactions, those numbers? It becomes a pain. So we have to make sure that we keep sober in an exam, no matter the kind of pressure. Are we together? Pressure is always there. It is too much. You get it from all corners. It starts with the question paper, and what follows is the neighbor in the northeast west when they are writing relentlessly, and they are even sweating for you, you're not writing. And then I think what sums up all the pressure is the ambulance. The ambulance sums up the entire what? The entire pressure. And you start asking yourselves questions, why do they bring St. John's ambulance around here? So meaning people faint. So people actually faint and you faint. Okay. Hey, this transaction. Oh, yeah, it is 7. Transaction number 6 on 8th of February, settled in full by what? Now, settled in full means what? Paid, not so? And by what? By check. An amount owed to Mr. Okulo, a farmer in Otuke. Mr. Okulo had supplied 30 bags of beans in December 2020 at shillings 180,000 per bag. The payment terms at time of the supply included a 5% discount allowed if full settlement was made within a month. Now, they didn't specify which day in December. You take it the way it is. Don't bring in assumptions. That, oh, okay, what if it was 1st of December? Then it doesn't qualify. You get. They didn't specify. They said beans in December 2020. So meaning you also take it in its general terms. We bought in December 2020, we are paying in February 2020. If we had paid in January 2020, that was going to cause a lot of ruckus around, not so? But now that we are paying in Feb, it may not cause a lot of problems, isn't it so? Because buying in December and paying in Feb, does it qualify you for a discount if you have to pay within 1 month? No. But what if he had paid in January? And yes, in January. Now, in such a case, you take it in its general terms. Are we together? You bought in December, you pay in January, you qualify. Are we together? Yes. No assumptions. No assumptions. But for now, no qualification. Because within December and February, there is a full month there. Isn't it so? Of January. Yes, please. Someone had a question, okay, maybe not. So how much is Akelo going to pay? It is 180,000 per bag. So 180,000 times 30 bags, what do we get? 5.4 million. So 5.4 million is settling everything by check. Okay, 8th of Feb. Okay. On 9th of Feb, withdrew shillings 1.4 from the business's bank account to contribute towards her son's wedding. Now this is a drawing, not so? Yeah, it is a drawing. Business resources put to personal what? To personal use. 1.4. That is on 9th Feb. Okay, that is okay. Then transaction number 8 on 10th of Feb received a check of 50 million from Quality Cereals Exporters Limited. On the same date, Akelo advanced shillings 10 million cash. Oh, sorry, 7 million cash to her agent in Kwania district for purchase of soybeans and Simsim to be delivered in first week of March 2022. These are two transactions in one. First of all, we are receiving. And we are receiving by what? We are receiving that money by check of 50 million from Quality Cereals. No other strings attached. We are just receiving 50 million from Quality Cereals. We treat it as such. Okay? That is 10th Feb. Quality Cereals. That is 50. Okay, and they told us that Akelo then advanced 7 cash to her agent in Kwania. Yeah? Advanced. What does it mean? So we are paying. Are we together? We are paying. So we are parting away with cash to her agent in Kwania. That is for purchase. Are we together? So ideally, this is like you're prepaying. Are we together? Yeah. You're having some bit of a prepayment. That is 10th. This is a prepayment. It's not yet a purchase. You have just paid in advance. 7 million. Yeah. Yeah. Cash. Okay. To be delivered, we don't care for now. On 9th transaction, on 15th of Feb, received a check from Gaffe Quality Millers in full settlement of their account. Now we need to trace back and see where Gaffe is, isn't it? We need to trace back. Gaffe Quality Millers is paying us. Number 4. That is the transaction that we ignored. And it happened on what? On 5th. So what were the terms? We are selling 20 bags, each at 50. per bag, and a 2% discount would be allowed if payment is made within 1 week. 1 week is 7 days. 5 plus 7. It is what? It is 12. Not so? So is GAFE going to receive a discount? No. Within a week is 7 days. So since it's paying on 15th, it's not receiving anything. Okay, so how much is the money? 20 times 50. That's 1 million, not so? Yeah. GAFE. That is 15. Check. Okay.
But your network is not good. Does not correspond to what you're typing.
Sure. Is it what everyone else online is seeing?
No. No. No.
Okay. So maybe it is a problem with the network where you are. You may try logging out and logging in again to be on track. Okay, on the same date of 15th of Feb, sold 20 bags of maize grains to ABC Secondary School worth shillings 1.2 million on credit, on terms that 5% discount would be allowed if the school paid within a month. We just skip it, not so? Credit transactions, they have no place in a cash book. Transaction number 10, 17th of Feb, received cash from ABC, the same school up there. Yeah? Yeah. From ABC, you had undermined them. 15th, they are paying on 17th. So receiving ABC in full settlement of their obligation. Then 60 bags of beans at shillings that to Kampala. Okay, that's a separate transaction. So we are receiving the other money. And definitely they are qualifying for the discount, not so? How much money? 20 bags worth shillings 1.2. Now there is no each there. Do we have an each? No. So meaning the 20 bags were worth 1 point what? Were worth 1.2. There are people that so they know what they have been doing is multiplication. So they will also multiply everywhere. So in such a case, someone gets 240 million. Yeah. And then you put it on the paper. Okay, guys, what is the discount? It is 5%. 5%. The discount is 60,000, and that is a discount allowed, not so? Yeah. So ABC is giving a discount of 60. Yeah. Is it okay? A discount of 60. And then how much are we actually going to receive? And it is cash. We are receiving, it was 1.2. So if we remove 60, it is what? That is it, yeah. ABC, and that transaction is on transaction is on 17th. All right. Sold the 60 bags of beans at shillings 360,000 per bag to Kampala Produce Dealers Limited after allowing a discount of shillings 2,500 per bag. She was paid by check. I repeat again. Sold 60 bags of beans at shillings 360,000 per bag to Kampala produce dealers after allowing a trade discount of shillings 2,500 per bag. She was paid by check.
Ignore the discount.
Someone saying that we are ignoring the discount.
No, we include it as discount allowed.
We include it as discount allowed. Guys, I think it is crystal clear. It is a trade what? Trade discounts, they have no place anywhere in the books of account. Are we together? But now the disturbing bit is the word after. Are we together? After. So we are selling 60 bags at shillings 360,000 per bag after allowing. Are we together? So meaning this money here is the money after the discount. Isn't it so? Isn't it? Maybe
Yes.
my English still has the problem.
Yeah, you are right.
Yeah? That money there is the money that they were supposed to pay, and this is the money that we actually received. Because that money, the 360 per bag, was after the discount. Are we together? If it was before the discount, then we're supposed to reduce the discount and we receive the remaining. But don't record the discount under discount allowed. Are we together? Trade, it is trade discount. But it is after the discount. So meaning the 360,000 is the actual money that they will pay us per bag. So how much? Because they settled. They settled by check. How much is that money? 360,000 times 60 bags.
2.16.
216.
It is 2,600,000.
260.
No.
Okay, 21.
2,600. Yeah, like that.
2,600. This is 17. So the Kampala produce dealers.
Excuse me, sir.
Yes, please.
I beg your pardon. I want to take you back just to the previous transaction.
Yes.
How did we get that 60 as discount allowed?
Why did we get the discount, the 60 as discount allowed? Go back to the transaction of ABC.
Yeah.
Go back to the transaction of ABC.
There.
Yes, received cash from ABC Secondary School in full settlement of their obligation. So we needed to trace when we actually sold it to ABC. And that was just previously.
Yeah.
Okay. And the details of the transactions were that sold 20 bags of maize grains to ABC Secondary School worth 1.2 million on credit. On terms that 5% discount would be allowed if the school paid within 1 month. And they indeed paid within 1 month because they paid on 17, 2 days after. So you have to get the discount. The discount is 5% of the 1.2.
Oh.
That is 60. And then the remaining money is what you receive as cash.
Okay, it is just 5% of 1.2.
Yeah. And then someone needed some more elaboration on what a trade discount is. A trade discount is there just to entice purchase of more goods. Are we together? Purchase for someone to buy more and more and more. So what we do is that before the transaction actually has occurred, we agree about that discount and it is finished. Are we together? Before the transaction occurs. And that is the reason as to why that discount doesn't have a place in our books of accounts. Because in accounting, we start from the transaction, occurrence of a transaction. So anything that is happening before the transaction, trade discount, no, it is out of whatever we are recording in our books of accounts. Are we together?
But again, it's trade discount.
Hmm.
Look at the discount allowed. It's the discount you give. It's like an enticing discount.
The discount allowed is to entice payment.
Yes,
Yet trade discount is to entice purchasing on more and more and more. Now, there's a difference between trade and cash. Cash discount is to entice people to pay early so that our cash flows are okay, to better our cash flows. That is a cash discount. Trade discount is to entice people to buy more. Yeah. So for a cash discount, it has a place in our books of accounts. Why? Because it comes way after the transaction has already occurred. Are we together? And it changes whatever we recorded in the first place. So we sold goods to you worth 1.2 million. Are we together? And we recorded it in our books. Because it was on credit, we debited our trade receivables, isn't it so? When you sell on credit, we debit receivables, credit sales, isn't it? By 1 million. But now here you come, you pay within the limit, within the time frame. Are we together? Meaning, in the first transaction, we had recorded that we are expecting 1 million from this receivable. But now that they meet the terms of the discount, we have to show that we are going to receive less. Are we together? That's why that discount must appear in our books as an expense. Are we together? And we expected 1 million, and now we are going to receive less than 1 million. That is what we are going to see after, maybe after our break. I want us to finish and break off. Is it okay? Is it okay, Irene? I hope it is. Irene that asked that question. Samuel, kindly mute. Samuel, kindly mute. Okay, so on 18th of Feb, deposited business cash worth 3.6 into the business bank account. So this time round, we are receiving money in the bank, not so? Of 3.6. It's coming from our cash money. That is on 18th. And then on the same date, we are received, no, cash is losing some money. The bank. Okay. I think that is okay. 27th of Feb, Akelo was informed about availability of soya beans and withdrew shillings 13 million from the business bank account and kept it in the business money safe. Okay. Bought soya beans worth 12.6 by cash after earning a trade discount of 120,000. Okay. So there are two transactions in one. First of all is for the withdrawal of money from the bank into cash, not so? So we are having 13. So we say that these are contras, eh? Okay, fine. Let's continue. So bought soybeans worth 12.6 by cash. After, are we together? Yes. 2.6 after earning a trade discount of 120. So the trade discount, ignore. The 12.6 is the actual money that we are supposed to pay. So we actually paid for it by cash, not so? 12.6 cash. Okay. Finally, on the same 27, paid rent 340 cash. The storekeeper's wages 250 cash, and paid herself a monthly salary of 400,000 cash. One by one, paid rent cash. Rent 340 cash. Three what? 340. Storekeeper's wages 250. How about the one that he paid herself? Salary. Someone might be tempted to call it drawings. Okay. This is a business transaction. She's an employee, not so? Hey, it is a business transaction. She's paying herself salary. Are we together? Hey. So salary is a business transaction. So we shall include it. Salary of 400. Yes. Oh. All right. I think that is it. We are done, not so? Now, just like other ledgers, this is a ledger that you should balance off at the end of a certain period. Are we together? So we should balance off this ledger at the end of a period. And now the month has ended, we need to balance off this ledger. Now, balancing off the ledger, you have to look at the left-hand side and the right-hand side. Ascertain which side has the greatest amount and which side has the least amount. Now, those two sides must balance. Are we together? So the side that has a least amount, it will have a balance. Are we together? Which is the difference between the two. Are we together? But as we are balancing off here, we shall compare cash with cash. Bank with what? Bank with bank. So what we are going to do, we are going to get the total amounts that are in the bank column on the debit side and the total amounts that are in the bank column on the credit side. Okay? So one team get the total amounts in the bank column on the debit. Another team get the total amounts in the bank column on the credit. Then the other team get the total amounts in the cash column on the debit. And the other team gets the total amount in the cash column on the credit side. Let's make that one a bit faster.
On the debit side, cash, debit side.
Yes.
I have 26,540.
It is 26,5 what?
40.
Please don't write it down as the way I've written. I'm assessing which side is greater. Okay. don't write it as yet. What do we have on the credit of cash? Or whatever you have gotten. If you have gotten any, you give me.
25,340,000
of cash.
Yes,
25.
please, on the credit side. 25,340.
Now look at this. Our debit is greater than the amount on the credit. Okay. Now the greatest figure is what forms the totals. Are we together? In the two columns, that is 26,500 and what? And 40, 26,540. Now the imbalance is the difference between the two, and we put it on the side that is less. Are we together? So that the two balance. And we are going to call it a balance carried what? Because it is at the end of the period. So it is a closing balance. So what we call a closing balance is a balance carried down, balance carried forward. Are we together? That is our closing balance. So balance carried down, and it will be the imbalance between those two figures. And what is that figure? It is 1,450. I think we are getting very many different figures. Okay.
It's 1,200.
Okay, it is okay. It's fine. And that will be on the last day of the month. That is on the 28th of February. Closing balances are on the very last day of the month. Opening balances are on the very first day of the what? Of the month. Are we together? Is it okay? So let's go to the cash column. The cash column. One team add the debit, another team adds the credit. It is the bank column. Yeah. I had said cash. We have finished cash. Let's do bank. On credit,
Debits.
36,225. 36,225. And then on the debit,
The debit 99,800.
so the debit is more. And that is how it is supposed to be under normal circumstances. Are we together? But bank can surprise you because of the element of an overdraft. Are we together? So 99,800. Okay. So still we are going to have the imbalance on the credit side. And how much is that imbalance? It is
63,575.
And still it is a balance carried down. Now, this is the stage where we started from our number. Assuming now they give you a number for the month of March. Are we together? They will tell you that they started with cash of 1.2 million and bank of 63,570 what? And 75. Then they give you other transactions. What do I mean? If you carry forward on the credit side, then you have to bring forward on the opposite side. Are we together? So meaning these figures here that you're seeing, there will be balances, opening balances. So there will be balances brought down on 1st of what? On 1st of March.
Excuse me, sir.
Yes, please.
What if we had gotten like on the credit side, for example, when bank on the credit is lesser on the bank on the debit, then do we say balance carried down, balance brought down?
Okay, if the credit side was more than the debit, then it means that we have an overdraft. Okay? So this imbalance, we should put it on this side. We say balance carried what? Carried down, and then we put it here. Are we together? Hey, because this is the side that has the imbalance. Are we together? If it was the other way,
So
and
it
then
is
we bring forward on this side.
down.
The same explanation that I gave you when we were beginning, that when you have an overdraft, the brought forward will be on the credit. Are we together? And someone is saying that how about the discounts? How about the discounts? How do we balance them off? We are not balancing off discounts because this is not their ledger. Are we together? This is not their what? Their ledger. This is the ledger for cash and bank, not discounts. We brought discounts there to show effect. Are we together? But we shall see the discount, the ledgers for discounts and how we shall balance them off. The same principle applies. For now, in a cash book, don't balance off a discount column, leave it the way it is. Are we together up to that point? I think let's have a break for 10 minutes. We come back at 7:54. 7:54, we come back.
First, let me scroll up. I want to see whether I missed out on one entry.
But you know it is long. I don't know where to stop.
7. Okay, I've got it. Thank you.
Okay, so we come back at 7:54 or 55. 7:55. Right, that is it.
Six. Bank accounts on this good. Bank.
Are you done, sir? I think you're on 0-0 now.
All right, I think we can resume. So in our accounting cycle, after the journals, we have to go to ledgers, posting the transactions to the ledgers. And we said that if you are to put transactions to the ledgers, we have to follow double entry. Double entry is very important. Of course, we know the double entry. We know we introduced double entry last time. We know how it works. For example, if someone says, let me use one of the transactions that we had here. Okay, let me use this one of the secondary school. Sold 20 bags of maize grains to ABC secondary school worth 1.2 million on credit, on terms that 5% discount would be allowed if the school paid within 1 month. Now, for double entry, that is a transaction and it has to be recorded. Are we together? In accounting, we have to record it. We're looking at a cash book. The cash book specifically, for it, it looks at cash transactions. But in accounting, that is a transaction that needs to be recorded. Are we together? Because we have made a sale. So when a sale is complete and our part of the performance obligations have been satisfied, then we have to go ahead and we record that transaction in our books of accounts. Question is how? Using the double entry. What would we what entries would we require? Please, if this is your first class, I strongly recommend that before the next class, go through all the previous the previous classes, because they mean a lot on what we are doing now. Please get time, squeeze your time, make sure that you go through them. Even when you think double entry has not yet sunk, you may need to go back and you refresh. That's why those videos are there. But maybe sometimes some of us have trouble accessing them because of money. You know, I think, I don't know, I'm not in admin, but I think for them to give them to you, must have paid something. That's what it is free. It is even free for now. So but I think before being administrators, they are human. So if you first go there and you talk to them that you don't take a call, I think someone can understand. Utilize that chance, please. You know, I know how it feels coming, someone talking about debit credit, when it is your first class, it is disturbing, very disturbing. But we shall try as hard as we can to see that we keep reversing and rehearsing the reason as to why we shall debit certain items and why we shall credit certain items. Now, a transaction like this, sold 20 bags of maize. If they say sold, it means that the transaction has occurred. Are we together? Now, in accounting, we don't have to wait for money to come for us to record that transaction, okay? Once you have made the sale, don't wait for money. If money has not yet come, then at least tell us that you have a right to receive. Are we together? And you recognize that right to receive. And that is what we call a trade receivable. Are we together? Or a debtor. If we had gotten cash, then we would have debited cash, being an asset. Assets increase by debiting. Are we together? Are we together, guys? So since we have not yet gotten money, we shall rather just debit a receivable. Are we together, guys? So we say one of the rules for you to come up with the best entry, for you to know which double entry to pass, you must know the element that is attached to it. Are we together? To that transaction, how many elements do we get from that transaction? Then you have to assess how each element is behaving. Are we together? Is it actually increasing and that is recognition, or is it actually reducing and that is de-recognition? Are we together? Then attach double entry to it. Double entry, I know I'm seeing some new faces. That's why I'm doing all this. Double entry, we said that double entry is simply based on one principle, one equation called the accounting what? The accounting equation. And that equation says that all your assets must be equal to equity plus what? Liabilities. This is it. These are resources. And these are what? And these are claims. Are we together? So whatever assets an entity has, they are people or they are persons that have claims in them. Are we together? And they are those people that actually contributed towards acquisition of those what? Of those assets. Are we together? And we are saying that there are two parties. It is either the owners or third parties, and those are liabilities. Each of them contributes to the assets. And at all times, that equation will balance. Are we together? That equation will balance, given the changes in those claims, changes in those liabilities, and changes in those elements of equity. Are we together? So we said that what we call double entry, it stems from duality. That there is a dual effect for each transaction, dual effect. And the dual effect is represented by the equal what? By the equal signs. So if you see we have a left-hand side and we have a right-hand what? If I'm to take you back to the cash book that we are looking at, the left-hand side, we say that it is a what? It is a debit, and the right-hand side is a credit. So everything on the left, debit. Everything on the right, do what? Credit. Are we together? Assets, debit. Liabilities, debit. Equity, debit. Are we together? Sorry, credit. Are we together, guys? Sorry, let me repeat myself. Assets, debit. Because it is on the left. Liabilities, equity, credit. Because that is it. For every debit, there must be an equal. There must be corresponding equal, but opposite credit entry. Debit, credit, debit, credit, debit, credit. That is it. Now, meaning here, so far we have two elements. Assets, liabilities, we know how they behave. Assets, debit. And by debiting, we mean that is their normal balance when they are being recognized. Are we together? When they are being recognized or when they are increasing. Are we together? So meaning, because of the opposite nature, in the definition, there is the word opposite. Are we together? If someone tells you that when an asset is increasing, debit. Because of the opposite nature, if it is reducing, then again you can't debit. You have to what? You have to credit, because there are two things: debit, credit, debit, credit. If a liability is credited because it is on the right-hand side of that equation, if it is credited, it means that as we are recognizing the liability, we credit it. Are we together? And by recognition, we mean when the liability is what? Is increasing, credit. So meaning if that liability is reducing, that will be abnormal. Are we together? And hence you have to debit. Are we together? The other elements, they come from changes in those ones. Are we together? Yeah. But as we said, that those ones, they will all fall under equity. This thing is overslowing. Okay. Let me just write it down. So we are saying assets are equal to equity. Guys, sorry for those ones that were there. Let's try to bring some people on board. Debit, and then what? And then credit. So meaning, what we mean here is that we shall apply the debit if these items are what? Are we together? So meaning the minute they are reducing, then what was a debit here becomes a credit. And the minute this is reducing, what was a credit there becomes a what? Becomes a debit. I want to pull out only one element called what? Equity here. Equity is made up of 4 items, so to say. We have capital and its proportions, and then we have incomes, and those two increase equity. The minute incomes and capital increase, equity does what? Equity increases. And then we have other two. We have expenses, and then we have drawings. Are we together? Those two reduce equity. The more you incur expenses, the more your equity does what? Reduces. And the more you remove resources from the entity, the more equity does what? The more equity reduces. Are we together? So the two that actually increase equity, it means that they will also increase in the same format or in the same manner as equity. Are we together? Because we are saying equity increases by crediting. Isn't it so? So if 2 items increase it, then it means that even as those 2 items are increasing, they will also be credited. Isn't it so? Because equity increases by crediting. So if we have 2 items that increase it, it means that themselves, they will also increase by what? By crediting. And from there, we get that capital and incomes, they also increase by what? By crediting. Are we together? And 2 of those elements, they reduce equity. Are we together? This is where it is mind-blowing. They reduce equity. Equity reduces by debiting. Are we together? And 2 items reduce it. So the more they increase, the more they reduce equity. Are we together? So those 2 items, as they are increasing, they take the form of equity when it is reducing. Mind-blowing, I know. Not so? Equity reduces by debiting. 2 items reduce equity. So the higher those 2 items are, the lower the equity. True or false? And if equity reduces by debiting, then meaning the other 2 items, as they are increasing, they will take the sign when equity is reducing. So meaning expenses and drawings, they increase by debiting. Mind-blowing, but it's okay, we shall be there. No problem. Let's go back. Let's go back to our transaction. Having looked at those, that is the summary of what we looked at in double entry. More about it, you can get that video and you try to get more. Are we together, guys? What if there are returns, both inwards and outwards? How are they treated in the cash book? Okay, that's where we are going. I said after the cash book, we are going to look at discounts and what? And returns. Are we together? That's what we are going to look at today. Okay. So for example, a transaction like sold 20 bags at 1.2 million. Sold 20 bags. When you sell, you're making sales. Sales are incomes. Are we together? Are we together? Sales are what? Are incomes. So if we are making a sale, it means that incomes are being recognized. So incomes are they're increasing. And incomes increase by what? By crediting. That's why we are saying that we are going to credit what? The sales account by 1.2 million. Are we together? We have not received this money. We have not received. Not so? But because we have met our own part of that, or of the contract, our obligation has been met, then we have a right to receive. We have not received, but we have a right to receive. Are we together? So we cannot debit cash or bank because we have not received, but we shall debit that right to receive. The right to receive is called the trade receivable. So we debit. And the reason why we are debiting trade receivable, because trade receivables are assets. Any right, what we call an asset is a present economic resource. And it is called the present economic resource because it gives the holder the rights to receive economic what? Economic benefit in the future. Are we together? So anything that gives you the right to receive economic benefit in the future, it falls within the realms of an asset. Are we together? So we are debiting trade what? Receivables by 1.2 million. We are debiting it because it is an asset. It has been recognized, or it is increasing, and our assets increase by debiting. What of notes? Notes what? Notes not payables. That forms a trade payable. Notes receivable, trade receivable. Notes payable, trade payable. Okay? Okay, guys. This is the double entry. Yeah? Now, in what we call ledgers, in the world of ledgers, this double entry, the way you're seeing it here, it is going to be actualized in what we call a T account. Are we together? That T account is going to be drawn for each element. Are we together? For each account title. For example, if it is an asset and it is a receivable, that receivable will have its own T account or its own ledger. Are we together? And that ledger shall record increases and decreases in that particular element. Are we together? So if it is a trade receivable, then once we have gone into a transaction and it has resulted into a trade receivable, then it means that we shall come up with a T account. Are we together? And we give it a name called trade what? Trade receivables account. Are we together? And for each T account, there must be a debit and a what? Still, it follows the same rules. Debit left-hand side, credit right-hand what? Right-hand side. Are we together? And then the same transaction has given rise into another element, which is income. Are we together? And that income is particularly sales. Are we together? So meaning we shall come up with the sales ledger, the sales account. Okay? And still shall have a debit and a what? And a credit. Now these sales ledgers, we shall record this transaction in there and any other transaction that relates to those elements. So if we go into another transaction and it is relating to trade receivables, shall put it in the same ledger. Are we together? If we go into another transaction and it gives rise to sales, we shall put them in the same what? In the same ledger. Are we together? So it records aspects that increase or reduce that particular account. One account. So question is, how are we going to include this particular element into those T accounts? We are saying debit trade receivables 1.2 million. By debiting a transaction, it means if someone says debit this, it means that go to that account and record that figure on the left-hand side. Are we together? Debit trade receivables alone means go to the trade receivables and include a certain figure on the left-hand what? On the left-hand side. So if the figure is 1.2, saying debit trade receivables 1.2, the English verbal meaning is that go to the trade receivables ledger, on the left-hand side, put 1.2 under the amounts column, because each ledger it has the following columns: date, account title, and then amount on both sides. Date, account title, and what? And amount. Are we together? On each side, that is the standard of a ledger. It will have a date, the account what? Title, and then what? Amount. Then even this side, date, account title, okay? And then what? Amount. So if someone tells you debit trade receivables with 1.2, is saying go to the trade receivables ledger, which we can see, not so? Go to that ledger. Under the amounts column, you put for me a figure, 1.2 million. Are we together? And which date was that? That was on 15th of what? Of Feb. Are we together? On 15th of Feb. Now we are populating column by column. And you see 2 columns have so far been populated. Are we together? Our next question is going to be, what is our 3rd column? But you first hold on. Then someone is telling us that you credit sales by 1.2. So go to the sales ledger, include 1.2 under the amounts column on the what? On the right-hand side. Are we together? Credit. The credit is on the right-hand what? On the right-hand side. Are we together? Debit, credit. For each ledger, debit is left, credit is right. It stems from the equation. The equation is assets equal resources, claims. Resources, debit, claim. Debit, credit. Are we together? So if someone says credit sales 1.2, they are saying go to the sales ledger and you put a figure 1.2. Guys, even if we don't put date, account, title, amount, know that that is how a ledger is structured. Are we together? So go to the sales ledger, right-hand side, put 1.2 million. Are we together? On the same date, which is what? 15th of what? Feb. Now, the middle part, which is account title, is empty so far. Are we together? Now, that brings out the other component. We say double entry by definition says that, or it states that for every debit entry, there must be a corresponding equal but opposite entry, but opposite credit entry. Are we together? Now, there are 3 things in that definition: corresponding, equal, and opposite. Are we together? Let me start with opposite. By opposite, I mentioned it. If someone says that assets are increasing by debiting, then it is by nature, the opposite nature, that if they are reducing, you pass the other entry, which is the credit entry. That is the opposite nature of double entry. Equality nature is that the amounts that you have put for each transaction, the amounts on the debit must be equal to the amounts on the credit. Are we together? That was made here because we debited trade receivables 1.2, we credited sales 1.2. Debits must be equal to credits. Now, correspondence gives people a lot of time, a hard time. The correspondence, a bit of double entry, is the ability for you to cross-reference another entry in one ledger. Are we together? That if you're saying you're debiting trade receivables, in the trade receivables ledger, you're recording 1.2, but it relates to what? Are we together? It relates to sales, which is the other entry. Are we together? So in the trade receivables ledger, we shall have a sales account. And in the sales ledger, we shall have trade what? Receivables account. Are we together? Do we understand this correspondence? Because there's trouble more so where we are having more than two entries. Debit, credit. Debit, credit, credit. Credit, 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 debit. Stuff happened. This is what I wanted to show you before going to I come again on what specifically? Because I've said a lot. Correspondence, I presume. Yeah?
Yes, the last bit of it.
Yeah, correspondence.
Yes.
So correspondence, we said, it is like cross-referencing. Double entry should communicate. If you're in one ledger and you have debited that ledger, that debit entry should communicate where the corresponding double entry shall be. Are we together? So if you're in the trade receivables ledger, the corresponding entry was sales, because debit trade receivables, credit what? Credit sales. So you correspond it to the other ledger. So if you're in trade receivables, correspond it with sales. And if you're in sales, correspond it with trade what? With trade receivables. They have to communicate. That even if I'm to close this ledger here, one of them, if you're to close one of those ledgers and you're looking at one trade receivables, you can easily understand what happened. The trade receivables were debited by 1.2 and cross-referenced with sales, meaning trade receivables were recognized as a result of sales. Are we together? So a certain sale was made. That is the reason as to why a trade receivable actually it came into place. Are we together, guys? That is double entry in a nutshell, and that is how we shall be putting it in the ledgers. But we are going to introduce a certain concept, and those concepts there are two concepts: discounts and returns. Discounts and what? Discounts and returns. Very, very important concepts, because they move way, way long. Now, discounts. Let's start with discounts. We talked about discounts, isn't it? We say that these discounts can either be trade, or they can be what? Or they can be cash. Trade or cash. And we are saying here, no accounting treatment, okay? In the books of accounts. Are we together? And then cash has an accounting treatment. Are we together? But it will also depend. It will either be a discount allowed or a discount what? Discount received. A discount received. I want to start with a discount allowed. Now, a discount allowed relates to we give it to who? Is it we are giving it, not so? A discount allowed, it is the entity giving. Are we together? It is the entity giving that discount. And it is giving it to the customer, not so? The customer. Given to the customer. Now, what is the accounting treatment? And I want us to be very sober here. Very sober here. What is the accounting treatment of a discount? I want to start with where it starts. Where does it start? Where does it start? And I'm going to use the same example here because we were selling, not so? Where does it start? This entire thing called the discount allowed, it starts with a sale that is made on credit. If it is not made on credit, then we don't have such issues. Isn't it so? If the sale is not made on credit, no issues of discount. But discounts shall come whenever you're making sales on what? On credit. And you know, we both know that business nowadays is very hard without credit. Isn't it so? It is very hard, because if for you you're selling cash, there will be people that are selling on what? On credit. So people shall be going the other side where they're selling on credit. Now, by the time you say that for you you're selling cash, must be having either something is very specialized and you are alone in that market. Are we together? That's when you can say that for me, mine is cash. But you may not avoid credit. It is very hard. And because it is very hard to avoid credit, it increases the risk of you not getting that money. Are we together? And after ledgers, we shall be even looking at it more in detail. Bad debts, trade receivables and bad what? And bad debts. So it increases your risk of you not getting that money. These are Ugandans. Isn't it so? Omuolo yimiridde obanjo duka. You give someone your money when, okay, let me say omuolo today. You're seated. They are sweet when they want the money, but upon demand, people even reach an extent of putting, they post on social media, give us our money. Don't think that we don't have what to use our money for. Now they put it public. Even us that you never gave your money, we are reading. But in the first place, these are Ugandans. They should ask World Bank. And by the way, that's a very nice example. Uganda, it's in itself, before looking at people, the Uganda up there, it is a true depiction of what is on the ground as its people. But you see, debts are very hard to really pay. Very hard, because at the time when you're paying it, it is as if you're giving that money out for free. And that is the reason as to why debts, it is the risk of writing off debts is there. It is there. It is, if you don't believe, go to banks. Go to banks. That's why they insure those loans. They insure them. But even on addition to insurance, they provide. They provide. The minute they see you, they provide you watatusasula. Because Ugandans are like that. So because you have that risk, you tend to put into place certain measures to make sure that you reduce that risk. Now, one of the measures of reducing a risk of bad debts is giving discounts. Are we together? You entice someone with a discount. That if you pay within this time, are we together? There are businesses, trust me, let me tell you, where someone refuses to pay you and you still transact with them by force, even after knowing that they refused to pay me. Is it true or not? You go to dealership businesses. I don't know if we have people here that work with depots, authorized distributors of Pepsi, I hear Coke. Do you know the nature of business? You go to Coke or Century Bottling, and they give you a dealership for a certain area. Are we together? That okay, for you, we are giving you one day gear. And maybe some small towns around. Then after one day, trust me, there will be another dealer that starts where you stop. Are we together? Now, your work is that you cannot, this is your market. Are we together? And you have a target of a number of crates to sell in that market. Now, you sell to someone and they have not yet paid you, and next month you have to also sell to them because that's the market you have. Isn't it so? Now, if they refuse to pay you and you say, I'm not going to give you any more, they go to your neighbor, the other dealer, and they tell the mama, you pay, you give me. And the other dealer will give. So to stop another dealer from coming into your territory, you have to continue giving. As you're writing off a debt, you're giving. That is how complex business is. Very, very, very terrible. So you have to come up with a lot of bukodio to tell people that, you see, you pay within this time, I will give you, and to better your cash flows. Because if you don't have cash, however much you tell us that you have a lot of profit and you don't have cash, you are in problems. We have a difference between solvency and liquidity. You may be solvent, but not liquid at all. Are we together? You're solvent, but you're not what? Into your business. So anyway, let's not go there. But where does it start? Number one, it starts with a credit what? A credit sale. And what entries do we pass when we make a credit sale? If you make a credit sale, we are saying we debit trade what? Receivables, the right to receive. Are we together? And we credit what? And we credit sales, the sales account. But now, 1 point what? 1.2. Because the sale has occurred, the accounting concepts are telling you that, please, if it has occurred, don't wait for cash. Record it in your books. Are we together? And you record it in your books that I have made a sale of 1.2. Under a layman's understanding, they would think that you have received the money, but is it true? You haven't. You have just recognized a right to receive. Now, this one is a very big principle in coming up with a cash flow. Someone can draw up an income statement and they tell us that they made profits of 15 billion. Are we together? Profits of 15 what? Billion. But if you're to check the bank account, there is 900 million. This person is very solvent, but is he liquid? Because liquidity is the ability to settle your obligations as and when they occur, they fall due. And you cannot settle them with anything other than what? Other than cash. So meaning you can sell a lot, but you're selling on credit, no cash. Are we together? And you reach a certain point in time, you need to pay off a certain loan, you don't have money to pay off a certain loan. And then they say that this one is illiquid. You're not able to continue as a going concern. Maybe did that? EFC. Are we together? Anyway, things are like that. That is the world of Mutuafida. They have gone through a lot. So we debit trade receivables and credit sales. Now we are going to give someone a discount. They come and they pay within the time. Are we together? So we are giving them a discount of 60 what? 60,000 shillings. Isn't it so? That is the discount. So meaning the actual money that we are going to receive is shillings. Is shillings 1140, isn't it so? Now, what happens at a point of settlement? Because at settlement here, this is where now we have a problem. On making the sale, we recognize the entire amount as revenue. Are we together? And we say that we made income of 1.2, but at the point of settling, receiving the actual cash, we are receiving less than what we recognize as sales. Are we together? And we had told our users that, you see, guys, we are having a receivable of 1 point what? Of 1.2. So we are expecting money equivalent to 1 point what? Equivalent to 1.2. But at the point of settlement, someone gives you 60. Are we together? But, sorry, someone gives you 1,140 in full settlement. Are we together? And remember, since you recognize the trade receivable of 1.2, when you recognize, at the point of derecognition, you have to derecognize the entire figure. Are we together? You recognize a trade receivable of 1.2, and the obligation for them is no longer existing, or the right to receive for you is no longer existing. Are we together? So if the right to receive is no longer existing, then you have to derecognize the asset, which is a receivable. Why? Because you no longer have a right to receive. And that right to receive, the absence of the right to receive has come as a result of the trade receivable paying. Are we together? But they have paid less. But remember, you have to derecognize in full. Now, derecognizing a receivable, if we recognized by debiting, we derecognize by what? By crediting. So that is one entry. We credit the trade what? By how much? By 1 point what? We don't care how much they have paid you. For as long as you no longer have a right to receive, derecognize all. Are we together? Derecognize all. Because after them giving you the 1,140, you no longer have a right to expect anything from them. Isn't it so? So since you recorded 1.2 in the first place, you have to derecognize by the same amount. Remove it. Are we together? Now, question is, as a result of derecognition, we are receiving money. Are we together? How much are we actually receiving? We are receiving 1,140 in our bank. Are we together? So meaning, as we are derecognizing of one asset, we are recognizing another. Are we together? We are recognizing another, and that is bank. Are we together? And since we are recognizing that asset, we are debiting in recognition. Are we together? So we shall debit our bank what? By how much? By 1,140, because that is the actual money that you're what? That you're receiving. Are we together? Now the difference there that you're seeing of 60 that you are actually not going to receive, it is an expense. It is what? It is an expense. And it comes as a result of matching. Why? Because you recognize an income up there of 1.2, but you have not received the entire. Are we together? You have not received the entire. So what you have not received, recognize it as an expense, it will offset that income. Are we together? So we shall recognize an expense. And remember, recognizing an expense, we recognize it by debiting. Expenses increase by debiting. So we shall bring our 60,000 and we debit it. And we call it a discount what? Discount allowed account. Are we together, guys? Huh? They are very important concepts. Okay. So that is it. If you have to go back to our ledgers, I don't know where we did our ledgers from. Okay. They are somewhere up here. Okay. They are here where we debited our trade receivables. Do we still remember? Hmm? Do you still remember what we did here, guys? When we had just made a sale, we recognized the trade receivable and we recognized an income called sales. Yeah, there. Now, at the point of giving the trade discount, I beg your pardons. I'm not to get. You're not with us. Okay. We are saying, in the first place, you recognized the entire transaction. You made a sale of 1.2 million on credit. So since you made it on credit, you debited a trade what? A trade receivable with 1.2 and crediting sales account with 1 point what? With 1.2 million. Are we together? This is what you recorded. And verbally, this means that I have made an income of 1.2 and I'm expecting that income in the future. Are we together? I'm expecting that income to actualize in form of cash in the what? In the future. Are we together? But upon settlement, the income does not come, all of it does not come in form of what? In form of cash. It is only part of it that comes in form of what? In form of cash. It is only 1,114,000 that comes in form of cash. The 60 has not actually been received. So where has it gone? Are we together? So to actualize that double entry, what you actually received is 1,140,000. So meaning we are recognizing, or our bank is increasing, isn't it so? Money in the bank, because we are receiving money in that bank. Are we together? Bank being an asset, it is going to increase by debiting. So we shall debit our bank account by how much? 1,140. The actual money that you have received in the bank. Are we together? The actual money. But as you're writing off a receivable, this receivable here that you recognized with 1.2, at the point of receiving the 1,140, your agreement is saying that that is the final payment. Are we together? So meaning the right that you had recognized up there to receive 1.2 is extinguished. The right that you recognized up there as trade receivables of 1.2 has been extinguished as a result of that receivable, paying only 1,140. Are we together? So if the right extinguishes, you have to de-recognize that right. Are we together? You recognized it at 1.2, de-recognize it, remove it from your books. Are we together? So meaning we are going to credit the trade what? The trade receivables to de-recognize them because we no longer have a right to receive. Are we together? And the entire 1 point what? Yeah, because you recognize them at 1.2. But given circumstances that have happened and your agreement, the entire 1.2 has to be de-recognized. Are we together? And since you told us that you made an income of 1.2, you will have received only 1.4 and you have given a discount. That discount shall be taken as an expense. You have incurred an expense. Are we together? Because there would be no other way you would tell us that you have received less than what you recognized. Are we together? Unless there is an expense that has been incurred there. So a discount allowed is an expense. Are we together? So the discount allowed of 60,000 is the expense. And the expenses increase by debiting. So in such a transaction of a discount allowed, we shall always debit the discount allowed as an expense. Are we together? So the discount allowed actually reduces the amount that you expect to receive from the from the receivable. Are we together? That is the discount allowed reduces that amount. Are we together? So that is it. And I just wanted to actualize this in terms of the other double entry, but it's okay. Let's leave it. For now, the grasp rate has reduced a bit for all of us. Let's go to discount received and we end this discussion today. Discount received. So discount received, where does it start? But is it okay? Has the question been answered? Noreen was not together with us. Is it now fine? Okay. Discount received. Where does it start? It starts from purchase, and it is a credit what? A credit purchase. If you have understood discount received, then discount allowed should not be a problem. Now, it starts with a credit purchase. You purchase inventory worth 5 million, for example, on credit. You purchase inventory worth 5 million on what? On credit. Now, because this is not cash accounting, when you go into a transaction to purchase, don't wait when you will pay for you to recognize. Are we together? Once you have purchased and the transaction is complete, they have given you what the goods that you actually wanted on credit, recognize that transaction there and then. Are we together? And instead of telling us that I have purchased using cash or bank, you rather tell us that I have made a purchase, but I have not paid. Are we together? And you recognize an obligation to pay. This time around, it is not a right to receive, but you have an obligation to what? To pay. And the obligation is a liability. So you're recognizing a liability. And by recognizing a liability, liabilities are increasing, hence crediting. Because liability is increased by crediting. Are we together? So whenever we purchase on credit, we shall recognize the expense, which is the cost of sale of making the purchase. Are we together? So making the purchase, we debit the purchases because those purchases are expenses. Are we together? So you have incurred an expense, which is a cost of sale, purchases. So we debit the what? Online people have not been there. Guys is online. Was it on?
Yes.
Where did, please?
Yes.
Where did you last hear me?
Debit.
Debit purchases, eh?
Yeah.
So we are saying when you purchase on credit, purchasing inventory for resale, you debit, you recognize an expense. Are we together? For starters, it is an expense. Don't debit stock. Are we together? Because if you debit, it is like you're telling us that you have an asset. But the period has not ended. You don't know yet if it is an asset or it is an expense. Are we together? You can only judge that if the period has ended and you have seen that this stock that I purchased, I haven't used it. So it is inventory. Are we together? We shall see that more in IS2 after ledgers. So recognize the expense, and expenses increase by debiting. So debit the expense. Are we together? When you debit the expense Ideally, you are supposed to pay off that expense either using cash or what? Or bank. But because you have used neither, you have not paid, then it means you have an obligation to pay. And that obligation is a liability. Are we together? It is a liability. And from our accounting equation, liability is increased by what? By crediting. So that's why we are crediting the trade payable. Are we together? The trade payables account. So we are crediting the trade payables account with the same 5 what? 5 million, because the goods that we bought on credit were 5 million. Are we together, guys? Is it okay?
Yeah.
So this is it. This is where it starts. And now, because we want to improve our cash flows, we tell this person that if please, if you pay us within 1 week, we shall give you, for example, 10% off. Okay? Oh, it is rare, but it is okay. We shall give you 10% off. Are we together? Okay, let's be more realistic. 2%. We shall give you 2% off. Are we together? 2% off if you pay us within 1 week. And indeed, that person, sorry. Oh, it is a purchase. So if they tell us that if we pay within 1 week, they will give us 2% off. And we pay within that 1 week. What happens? Now, this is it. If we pay within 1 week, it means that we are going to pay an amount that is less. Not so? What is 2% of 5 million? That is 100,000, right? Is it? 100,000. So meaning we are not going to pay 100,000. We shall pay 5.9 in full settlement. Are we together? Sorry, 4.9 in full what? In full settlement. Now, the minute we part with the 4.9 to pay it, it means that we no longer have an obligation to pay 5 million. Please note my words right. I'm not using them at random. Some of these words. It means that we no longer have an obligation to pay 5 what? 5 million. The minute we part with 4.9, we no longer have an obligation to pay 5 million. Before paying it, in our books, we are saying that we have an obligation to pay 5 what? 5 million. But now that we have paid within the time limits, yeah, we can enjoy the discount, isn't it so? And as a result of enjoying that discount, we are going to pay less, isn't it? We are paying less by 100. We are paying 4.9. So meaning if we part with 4.9, maybe using a check, if our money in the bank reduces by 4.9, the entire liability will be written off. Are we together? If you're to go back in our conceptual framework, somewhere, somehow, I told you we de-recognize an asset when we no longer have control. And by control, we mean a right to receive. Are we together? And we de-recognize a liability when we no longer have an obligation. The only problem is that by the time we studied them, we never knew where they are going to help us. So we left them there. Okay? But we still have time to go and fetch them back. Those two concepts are very important. Actually, the entire topics in the conceptual framework move with them. So what are we going to do? We are going to de-recognize the payable in full, isn't it so? And we are doing that because we no longer have an obligation. We no longer have an obligation. Sorry, debit. Okay? We are going to debit because we no longer have an obligation. We no longer have an obligation. And then, how much are we actually paying in our bank? Our bank is reducing, so we credit, not so? By 4 point what? 4.9 million. Now, we are saying you had a payable of 5 and you have ended up paying 4.9. In our conceptual framework, what was the definition of income? They come as a result of an increase in assets or a reduction in a liability. Are we together? That result into an overall increase in equity. See what it is. Other than contributions from the owners of equity. Now, if you're to look at this, there is a reduction in a liability, which is a payable of 5. We had a payable of 5 and we have extinguished it with 4.9. Then it means that that reduction there of 0.1 must be an income because it is not as a result of contributions from owners. Anyway, but just have it like that, okay? And we make sure life is easy. We always want life to be what? To be easy. But the difference here, you had a payable 5 and you have ended up paying 4.9 to settle it in full. Then it means that the difference there that you have not paid is an income. Are we together? It is an income. So the 0.1 million is an income, and all incomes they have a credit balance when they are increasing. So we credit the income, and that income is going to be a discount what? A discount received. Guys, things have started being serious. Things have started being serious. So meaning we have to either equal the seriousness of things or we surpass the seriousness of things. The bare minimum should be equaling the seriousness of the things. As they are getting serious, we also increase our seriousness to that level. Okay? Don't reduce the seriousness as things seriousness is increasing. Is it okay? Because I want to stop here. I want to close the class unless you have a question or you have not understood. But that is it. Guys, please go back, read the conceptual framework, read double entry. Visit the admin. Do we have a class on Friday? We have a class on Friday. So please, before Friday, you have only tomorrow. Visit these guys here. They give you that video of double entry. I think that there are not so many classes behind, are they? There are not so many. And each class is, those ones that we did first, we were not so serious. They are short. So you can watch all of them in just one day. Is it okay? For guys that were here, please go back, revisit. Reread double entry, reread the conceptual frame, read the conceptual framework. More so starting from elements of financial statements, because that is what we are going to be dealing with from now going forward. Elements of financial statements. Their recognition, their derecognition, their meaning in terms of names. As you're reading those names, I don't want you to just cram the definition in the head. Make sense out of the definition. That's when it will be of help and of use to you. Are we together? Because that's where it starts from. All right. Thank you very much. Until we meet again, we have just looked at some of the companies. Returns next time, returns inwards and returns outwards. Then we shall do a number on a general ledger, looking at the ledgers. I think that will be Friday. Oh, that work will be for Friday. And by then, I think we will have covered, yes, half of the syllabus, or close to it. Yes, half or close to half. Hey, by Friday. No, I'm going to send them tomorrow in a PowerPoint, okay? Then we shall revise them when they are in a PowerPoint. It's better, okay? So tomorrow, please, you can pop up a message in that group to give me a reminder so that I send before I come. All right, guys, have a good night. Meet on Friday.